Actually, if you're not confused, it's a problem. Actually, people have to be periodically confused. Too much of clarity is a big problem. Is it important that you have bad times? I think it's bad times are much better. In fact, we did an analysis at ICICI Prudential and we found that the best times to invest are bad times, and the worst times to invest are the best times. So if you are an SIP investor and you say I'm going to invest only when the markets are up, that's not SIP investing. That is momentum investing. So we believe that value investing is one of those themes which works in the longer run.
Hello, friends. Welcome back to another episode of Mutual Fund Ki Baat. Today, of course, we have another wonderful speaker with us, and we are going to be talking about economic conditions. We're going to be talking about different things happening around us. We're going to talk about investments, and obviously, we're going to talk about mutual funds. So let's see who our next guest is. So today with us, we have a very renowned personality who is well known across the mutual fund industry. We have Mr. Sankaran Naren, who is the Chief Investment Officer (CIO) for equity at ICICI Prudential Mutual Fund. Sankaran Naren manages about 51 mutual fund schemes at ICICI Prudential AMC, and some of them are multi-asset funds, balanced advantage funds, and equity and debt funds. Naren comes with 21 years of experience in equity research and operations and fund management. Sankaran Naren holds a BE from IIT Madras and PGDM from IIM Calcutta. Before joining ICICI Prudential AMC, he worked with different financial services companies like Refco City Securities India Private Limited, HDFC Securities Limited, and Yoha Securities in various positions. Hello, Naren sir. Welcome to MF Ki Baat. We are truly honored to be having you on this particular show. We've heard so much about you. We've read so much about you, right? You obviously have been with ICICI for such a long time. But, when it comes to investments, I've been an investor for about 18 years now. I started my investment journey back when I was in college. But in your case, I'm sure your investment journey, your professional journey has been much longer. So, can you tell us a little bit about yourself and how your investments started, and how did you go about doing it, and a little bit about your professional journey as well?
I think clearly the FERA issues, in the 70s, all the MNCs had to dilute in India, and they had to come up with public issues, and most of those public issues were like lotteries due to the controller of capital issues.
Yeah.
And it allowed investors to make a lot of money, easy money in those days, and that is what got my father interested in equities, and thanks to which I got interested in equities. So for a South Indian like me, I got interested in equities in early on, and while I was studying engineering at IIT Madras, I somehow found finance very interesting and opted to go to IIM Calcutta. And I had this dream to be a fund manager. At
Wow.
a time, there was no mutual funds, so I finally got that opportunity much later in the year 2004. A lesser known fact is that in 1993, when the first mutual fund started in Chennai, I made an effort to become a fund manager in Kothari Pioneer Mutual Fund, and I didn't get the job. But nevertheless, in 2004, I got the job in ICICI Mutual Fund, and it is a very interesting job to manage other people's money. So whatever decisions you take helps other people to make money. At the same time, the wrong decisions that you make results in other people losing money.
Yeah.
It's a very important job and difficult job, because every day you have to think whether you're doing the right thing for your investors or the wrong thing for your investors. And equity investing is not arithmetic. So what I learned in engineering, I had to forget, because it's very different from arithmetic. No one could have imagined at the start of this year that you will have a Ukraine war. And so things suddenly come out of nowhere. And so it's a very difficult job from that point of view, because different things come up at different points of time. Some things help you, some things hurt you. And you're managing other people's money, not your own. But at the same time, it's very interesting because when you end up making money for investors and investors meet you in railway stations or airports or public places and say, I made money because of you, it's a very nice feeling. But if I lose money for people, it's a bad feeling. So it's a very interesting job, I must say.
Yeah, but I guess with that kind of responsibility, because you're managing people's money, and of course you see so much uncertainty that's happening, right? So I'm sure it's fulfilling as well because I mean, like you said, when people walk up to you and say that we made so much money because of you, I'm sure that's a good feeling in itself. So you've seen a lot of you've seen a lot of cycles, right? You've seen the rally from 2003 to 2007. You've seen the recession in 2008. Now, of course, all of us have seen 2020. So, what are some of the learnings, so important and interesting learnings that you would like to pass on to the younger investors, where people who've just started their investment journey? What is it? What are the learnings that you would like them to know?
So when people say we have made money because of ICICI Prudential, I tell them it's because of markets. First question I must answer properly. And so the reality is that you have to remember that asset allocation is the best way to make money in the long run. This was something we realized in ICICI Prudential after watching the global financial crisis very closely,
Hmm.
and we popularized a category called balanced advantage
Yeah.
fund, and that category is now become very common in India. And in my opinion, it's responsible for the lower volatility in Indian equity markets.
Yeah.
And I think it's very important that investors follow asset allocation. And what is asset allocation is just buying something when it falls and selling something when it goes up.
Yeah.
Looks very, very easy, but it's more difficult to accomplish. And that's all we try to do in categories like balanced advantage. And that's all you need to do. And all we believe is that as long as you follow categories like balanced advantage fund and do SIPs, systematic investment plans, you're actually headed for making good money. As long as you save and do these things over a 30-40 year period, you're likely to make good money. And this is what we learned at ICICI Prudential, and that is what we try to tell everyone across India whenever we do roadshows, that we try to tell people all you need to do is do save, do systematic investment plan, and invest in categories like balanced advantage. As long as we do these three things over the next 30-40 years, by the time you retire, you'll have a decent amount of money to spare.
Yeah.
And that's what we tell people.
Yeah. So timing the market is not really important then, right? I mean, we don't have to worry if markets are going up, markets are going down, because if you're investing for long term, it should help, right?
The timing is being done through systematic investment plan, which ensures that you're buying when the markets fall. Timing is done by categories like balanced advantage. We do the job of timing. So it is not that timing the market is unimportant, but timing the market is done by the products that you are investing, like systematic investment plan and categories like balanced advantage fund.
Right. Right. Yeah. Oh, absolutely. Right. I mean, so, like investing for long term, having the patience, having the discipline are some of those core fundamentals that all of us should keep in mind while we are investing our money. And completely with you on that. So, there've been a lot of new investors who've been added in the equity space in the last 2 years, and we all know that there've been many investors who've just started their investment journey in 2020, right? And they've seen good 2 years, 2020, 2021. And then we have this year where so many things are happening. We have the geopolitical crisis and inflation's going up. So, obviously the investors are really confused at this stage. So the question is, what should be the mutual fund strategy in a scenario like this? Because when you've just entered the market and you've seen good times, and then within 2 years, you also see the downturn. So, as an investor, what should be my mutual fund strategy then?
Actually, if you're not confused, it's a problem. Actually, people have to be periodically confused. Too much of clarity is a big problem. In fact, I keep telling my colleagues, you can't be saying that I'm very clear, because most of the time markets are complex.
Yeah.
And so I think, we are headed for a period of, it's very interesting, we've been telling people, the world's biggest fund managers are not fund managers of equity. It is actually the US Fed.
Yeah.
They have $8 trillion. So in 2020, the US Fed, Mr. Jerome Powell kept saying, I want to create inflation, I want to create inflation. So when he was creating inflation, he managed to push all the markets in the world up. Now, if you look at what US Fed does and what all the governors keep talking, they want to say, we want to kill inflation, we want to kill inflation. So what happens is they basically bring the markets down.
Yeah.
It's really funny. In just 2 years, they changed the narrative from creating inflation to killing inflation. And essentially, that has resulted in markets going down across the world.
Yeah.
So, is it important that you have bad times? I think it's bad times are much better. In fact, we did an analysis at ICICI Prudential and we found that the best times to invest are bad times, and the worst times to invest are the best times.
Yeah.
So if you go back and look at 2007, anyone who invested in 2007 were the people who lost money.
Yeah.
People who invested in 2008 after Lehman, they always made money. So in fact, the people who invested after the World Trade Center bombing anywhere in the world made money. So, one of the interesting things is when you're investing, you have to have bad times. So if you have very good times, actually it's the worst time to invest in equities. So somehow, people think that you should have good times to invest in equities. The best times to invest in equities is when there is a global big event which has hit you. If a big global event hits you, you have to invest a lot of money in equity. And this is the learning that we had by looking at markets across over long periods of time. So people fear bad times. Actually, I tell all my colleagues that the best times to invest are the worst times.
I think it's more psychological more than anything else, right? I mean, logically, of course, what you're saying is absolutely right. I mean, we should invest when the markets are going down. But I think it's more psychological from an investor's point of view that markets are going down. What if it goes down further? Then I'm going to lose out. And that's probably a short term scenario, but then that's the assumption that most investors have. So yeah, which is fair. So another question is, and it's something that I've seen after my interactions with so many people, that a lot of young investors. Okay, let's just assume the people who started investing 2 years back, they would look at a lot of sectoral and thematic funds to start their investments, right? So even within my known circle, I've known people who are banking big on, say, technology sector, right? They're saying technology is the next big thing, and we want to invest in technology, everything technology. So the point is to look at a sectoral theme or to start your investments with a sectoral or a thematic fund. Is it really a good option? So if a person was to start his investments, what would be the right types of funds, and should it be sectoral or thematic funds, or should it be some other category?
The first fund we tell people to invest in, as you know, from a category perspective, is balanced advantage.
Yeah.
Another fund which we tell people to look at is the tax plan.
Yeah.
We tell people, what we realized over a period of time is when people invest in sectoral funds, they look at past returns and invest in the best performing sector.
Mhm.
But actually, if you want to make money, you have to invest in the worst performing sector. How do I convince people to invest in the worst performing sector?
Yeah.
So what we did was we created a cat fund called Thematic Advantage Fund of Fund, and actually we invested in the worst performing sector
Okay.
normally. So and that works much better because if you go and look at commodities, it had done very badly till 2019. So you invested in commodities.
Yeah.
If you invested in pharma at that point of time, you actually made money.
Yeah.
So we believe that that kind of a framework works much better, that you invest in something like look at the past, look at the worst performing sector, and we invest in it in a category called thematic advantage fund. Of course, every sector thematic fund has its own risks, but we found that all these things work in themes. So if you go back and look at the last 20-year history, in 1999 2000, people who invested in technology funds lost a lot of money.
Yeah.
2007, people who lost invested in infrastructure fund lost a lot of money. People who invested in 2015 in pharma funds lost money.
Hmm.
So somewhere, you have to invest in the themes which haven't worked rather than in the themes which have worked. So that's what we try to do in this kind of a theme fund. And that framework we like. Otherwise, you do SIPs.
Yeah.
So because technology is not going to go out of favor in the next 10 years or 10, 20 years,
Correct.
banking is not going to go out of favor in the next 10 years or 20 years. So if you're doing systematic investing, it's all fine. But if you're doing lump sum investing, choose the category which has done, choose the theme which has done very badly.
Yeah.
That's the framework we believe in much, much more
Okay.
rather than reverse. Of course, technology is interesting now. Pharma is interesting now because both these themes have done badly. And that's why we like it at this point of time rather than anything else.
Yeah, yeah. We have about manufacturing. I mean, that's another theme which a lot of people are interested in, right? And a lot of people are looking at it.
Clearly, it's a very interesting thing to do systematic investing at this point of time because clearly now you got Europe plus one. Europe's energy costs are so high.
Hmm.
People tell me about China plus one, but then China continues to export very well.
Correct.
And so we believe that Europe plus one, China plus one, the fact that you have a PLI plan across sectors, manufacturing should be a good long term theme and therefore a very, very interesting SIP framework for considering this point of time.
Yeah. So you would recommend to go for? I mean, it's okay to look at thematic funds, but maybe something like the thematic advantage fund that you're talking about, or look for themes which are not doing so well, right? So
Yeah,
which have the potential to do well in the future. Yeah. Fair. And sector is also very cyclical in nature, right? So I mean, at any point in time, you would have different sectors doing well because it
absolutely.
then also
Absolutely.
a cycle. So I guess. So do you think sectoral investing should be a short term or a relatively long term, theme for us? So when we are looking at sectoral investing, should be for short term or for long term?
It should be long term. Clearly, it should be long term. And if you invest after huge underperformance, it can be shorter term. But if you invest after huge outperformance, it should be longer and longer term.
Yeah. Okay. Okay. Fair. Yeah, absolutely. So, so we've spoken about the different types or categories of funds. And of course, there are a lot of categories. And you rightly said that as long as you're selecting the right ones and you're doing it systematically, it should work. But, I think as an investor, selecting the right fund is extremely difficult, right? I mean, because there are so many funds that are available in the market. So, as an investor, what are some of those pointers that I should keep in mind while investing in a mutual fund? So basically, how do I narrow down a mutual fund scheme? So what are those things or those pointers I should keep in mind?
See, over the last 20 years, what I have seen over a period of time is, I was an investor in 90s, much
Hmm.
before I joined ICICI Mutual Fund.
Yeah.
And, I believed in the momentum school of investing. Then in 94, 95, 96, I lost money by following the momentum school. Then I read books on Warren Buffett and then learned about value investing, learned about Benjamin Graham. Then I started recognizing value investing as a theme.
Hmm.
So, after that, I avoided the 1999 2000 tech boom and bust. So I first avoided the boom, which meant that I didn't make money in the boom.
Yeah.
So then I learned that, if I had to think long term, value investing works well. So, so from that time onwards, over the long period of time, I came to a conclusion that value investing is one of the very interesting long term models of investing
Hmm.
for someone who wants to invest for the long term.
Okay.
And luckily, I got a chance when I joined ICICI Prudential way back in 2004 to be involved in the Value Discovery Fund,
Yeah.
which today has completed 18 years. So people ask me, will value investing work in a growth market like India? But my experience of 90s in my personal investing experience showed that value investing does work in the long run.
Hmm.
Look at the 18-year experience of value discovery. There have been periods like 2007, 2016, 17 when it didn't do well.
Yeah.
But the long term experience has been good. So we believe that, value investing is one of those themes which works in the longer run.
Mhm.
And that framework is something which I found useful
Yeah.
for investing. And maybe we at ICICI Prudential have been associated with this school
Hmm.
over this period because, most of the time India is perceived as a growth market. So
Yeah.
to believe that value investing will work
Hmm.
was something that was not something widely accepted at that point of time. But today, after 18 years of a fund, people do believe that it worked in the long run. At least 18 years, it works.
And I also think you have different types of investors, right? So you have growth investors who would probably look at more growth funds, but then you also have a lot of value investors who would be looking for funds like the Value Discovery Fund and the likes, right? So it's only fair that we have everything available to us, and then we get to decide what we want to invest in, right, based on our own investment strategy. So,
Absolutely.
yeah, exactly. So that's good. Now, SIP is something that I think we have to talk about. Yeah, I mean, you already spoke a little bit about it, but then SIP, I think, is one of the most brilliantly marketed products, and rightly so, in the last few years, right? One of the best ways of actually becoming a part of of making it part of your investment journey, investing in mutual funds. So, tell us a little bit more about SIPs and how SIPs can truly benefit an investor in the long term wealth creation journey. So, we all know about SIPs, but we want to hear from you in terms of what you think and how SIPs can help all of us.
See, actually, I spent 33 years working, and there have been periods of time when the markets haven't done well.
Yeah.
In recent times, it was 2020, March, April to, let's say, August, September.
Yeah.
What SIP does is it ensures that you invest when the markets are not doing well.
Yeah.
And those installments which you have invested when the markets have not done well, they give you valuable returns when the market turns and gives investors a very good investing experience. So, what is SIP? It ensures that it removes the emotions from investing and ensures that you are invested when the markets are down.
Yeah.
So if you are an SIP investor and you say I'm going to invest only when the markets are up, that's not SIP investing. That is momentum investing.
Yeah.
So I think what SIP has done and what the mutual fund industry has managed to popularize is that basically it has improved the temperament of investing because look at the 2020 installments in March, April, May, June, the kind of returns you would have got on the installments that you have invested in those 4 months is awesome
Yeah.
because my Nifty was below 10,000 at that point of time. So look at the kind of returns you would have got on those installments. So I think it primarily improves the temperament coefficient of your investment and essentially ensures that you have invested when the markets are down. The second is it has also improved the savings habit in investing.
Yeah.
Many of the people whom require to create a savings habit in their earning years, and somehow the SIP habit has ensured that people save during the earning years. So there is an earning year, there's a retirement period. So it has ensured that people have a savings habit during the earning years. So I think the combination of creating the right temperament for investing and creating a savings habit during the earning years has resulted in a superb combination for long term wealth creation. And I think I should compliment the entire mutual fund industry for working very hard to creating and popularizing this product over a period of time. That all long term investors who have done SIPs, but remember, it's very important when markets fall they should continue with their
Yeah.
SIPs. If they do it only when the markets are up, that is not SIP.
True. I mean, it has to, the rupee cost averaging that we talk about has to happen, right? I mean, in
Yes.
my interactions with people, right, with so many investors that I've interacted with over the last 7, 8 years, people tell me, I don't want mutual funds, I want SIPs. you know, so SIP has become such a big craze where people really want to learn. They really want to have SIPs in their portfolio, which is great. I mean, it is one of the best ways of bringing in discipline to your investments more than anything else. So yeah, like, and I can see that, even from the conversation we've been having in the last half an hour, you've spoken about SIP 2 3 times. So I know that you're a true believer of SIPs, which is great. So, another question is that, when we're looking at commodities, right? Earlier, I think the only commodity mutual fund schemes that we had was gold. So it was like, if you're looking at any ETFs or any commodity related mutual funds, it would be a gold ETF. But now with silver ETFs coming in, and there's so much chatter about silver ETFs. Um, how do you think silver ETFs would help us in diversifying our portfolio? So we
Yeah,
understand.
silver is a more volatile product. So, you have the potential to get much better returns at higher volatility.
Yeah,
And gold is a product, which Indians have in their direct ownership also good amounts.
yeah.
Silver they normally don't have. So I think the industry has done a good job thanks to the regulator of creating the silver product, and therefore it's a valuable addition to the entire precious metal fraternity.
Yeah,
And I think it'll be an interesting product, albeit more volatile. So if you see the volatility of silver, it's a much more volatile
yeah,
commodity compared to gold. And I think we were one of the first to come up with the product, and we think it's a very interesting product. Particularly, we believe that, once the Federal Reserve actually stops increasing interest rates, that's when precious metals tend to do well.
yeah,
So I think the best time for silver is when Mr. Jerome Powell comes and says, I'm done with my interest rate hiking cycle.
yeah.
And that point of time is when we expect silver to do well.
Okay,
Till that point of time, I think again, this is one more category where you can do systematic investing.
yeah. Fair. Yeah, but it's fair to have a small allocation to a silver ETF, right?
Absolutely.
Yeah, yeah. It helps in diversification, and that's our goal, right? To help to
Yes,
diversify.
absolutely.
So perfect. Okay. So, now we've spoken so much about mutual funds. We've spoken about categories, how to invest. We've spoken about SIPs. I think now let's move on to economic factors, because I'm
Yeah.
sure a lot of our viewers would like to know your views on the different things that are happening. So, for example, there are a lot of factors which influence the markets, right? And there are global factors, there are domestic factors. So, what are your views on that? So, especially with everything that's happening around us today, what are your views on how the markets are expected to move?
I think we are headed for a volatile period. How long the volatile period lasts is difficult for anyone in India to judge
Okay.
because it is driven by the globe, not driven by India. And it's driven by factors in the monetary policy of the US Federal Reserve. It's driven by what's happening in Ukraine.
Yeah.
So I believe the combination of the two means we are headed for a very volatile period in the near term. And frankly, I don't think it's possible for Indian fund managers to genuinely predict how long this volatility lasts.
Okay.
India is not a cheap market at this point of time. The Indian macro managers in 2020 handled it brilliantly,
Yeah.
due to which so far India has been less volatile than global markets. But the longer crude oil is higher, I think the more difficult it is for India to stay less volatile.
Yeah.
That is a challenge at this point of time, which is beyond the control of anyone in India. So many of the see, it's very easy for us to say that we should be in control of the volatility, but it's impossible for anyone to say what will happen because it's completely outside the control. In
Yeah.
fact, big markets across the world have been very volatile
Yeah.
and will continue to be volatile.
Yeah.
What's a challenge at this point of time? The real challenge is India's valuations are much higher than most parts of the world, with the exception of US
Hmm.
and India. Most of the other markets in the world have become very cheap.
Yeah.
And that is a problem because as and when the market turns, you'll find that the other markets are so cheap compared to India that they should do much more on the upside than India.
Yeah.
That's where we are at this point of time. So it's a complex market. So, which is one of the reasons we are telling people to also look at debt mutual funds,
Yeah.
because here what happens is interest rates in India have always been higher than any other parts of the world.
Get it. Yeah.
So there, you have categories like floating rate categories which even benefit with interest rates going up.
Yeah.
So we think, as long as investors choose to invest in debt mutual funds, and as you know, most investors don't even look at debt mutual funds. So we think, those kind of categories can also be looked at for investment
Yeah.
for the near term till the time the entire economy settles and we reach a situation where we can say from here on things are normal.
Yeah.
Fortunately, while we would like to say that we can tell you exactly, the reality is none of us know.
No. Yeah.
And that's the real challenge at this point.
No, of course. I mean, I think all of us understand that all these are very unpredictable events which are not in our control, right? If it was, then we would know what we have to do about it. But since we don't have control over these events, we just have to wait and watch. And like you rightly said, maybe debt investing is probably, the right way to go about it till there's a little more stability that's there. Fair. Okay. So, in 2021, the general worry was inflation. And currently, of course, the war, the geopolitical crisis took it to the next level, right? Now, of course, because of this, all the leading central all the leading central banks are fighting inflation at this point in time. Now, crude oil is one of the most, or one of those key influencing factors for inflation, right? So, keeping that in mind, OPEC Plus has announced that it's going to slash the oil production by 2 million barrels per day. And, what kind of impact do you think it's going to have on an Indian economy, right? And will it further increase inflation, or, therefore the interest rates will go up? So, what do you see? So, what is your take on this?
See, our view at ICICI Prudential is war is much more important. The war ends, oil can come off.
Yeah.
See, in fact, all the people who talk about 2 million barrels per day cut, they all have written saying that the maximum cut which will happen is only 1 million barrel.
Okay.
Because many of the people are not producing also to the extent of the OPEC quota.
Yeah.
So they can't fall by 2 million barrels, is what they say. I think the war is much more important. If the war ends, I think that will be a much more powerful catalyst for oil to fall rather than worry too much about what the OPEC quota is. And that's what we see at this
Yeah, I
point.
mean, hopefully it would have a cascading effect. If the war ends, then we are going to have a
Yes.
cascading effect, and we should see the oil prices coming down. Yeah, but I guess it is something that a lot of investors do worry about, right? I mean, anytime nowadays, I think any news that comes up tends to worry us, right? Because there's already so much that's happening that we don't want anything else to add on to it. And my next question is actually related to that. So inflation, interest rates going up, all of that, and then suddenly we hear news about Credit Suisse, and it's bringing, the whole scenario, which is bringing back the Lehman Brothers fear, right, of 2008. So you think the Credit Suisse crisis could actually trigger another financial crisis for us? Should we be worried as investors, or do you foresee something as big as Lehman Brothers here?
Actually, post 2008, the global regulators have been so careful on financial system that I actually don't expect a Credit Suisse. I don't expect a Lehman kind of event in the financial system. There can be some other kind of event which I can't foresee.
Sure.
But I believe that the financial system has been so tightly regulated post 2008
Yeah.
that I think that problems are not going to come from the financial system.
Mm-hmm.
Can they come from some other part of the system other than banks? I do not know. But I think the banking system capital requirements have gone up.
Mm-hmm.
The extent of leverage in the banking system is much lower than 2008. I think the non performing loans in the banking system are much, much lower.
Yeah.
Look at India also. The non performing loans in the banking system today are possibly at its lowest in the last 10, 12 years. So I think the banking system is today in one of the best shapes in India. So we are in a very different situation from what we were in 2008. So I think, people always equate problems with the past.
Mm-hmm.
We could have some other problem which we don't know about. And that's the beauty of financial markets. Go back 1 year back, I would not have known where is Ukraine. And that is the reality. And that's why I'm not saying there can't be problems. I'm saying the problem will always be something that you and I did not talk about today.
Yeah. Yeah. Yeah, absolutely. So we just hope what you're saying is right, and we don't see another Lehman Brothers happening because I think as an economy we've seen enough. So yeah, fair, fair. So in a recent Morningstar conclave, you said that since 2008, central bankers have become fund managers. What exactly do you mean by that?
See, actually, whenever at the first sight of trouble, they started printing money and ensured that the markets didn't go down.
Yeah,
So in November 2021 was the first time that the US Federal Reserve said, no, 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 I am going to stop printing money. I'm going to start worrying about inflation.
yeah,
Look at it after that time, how the markets have behaved across the world. It's become volatile. So
yeah,
I think, basically even today, the central banks decide how much volatility is there in financial markets
yeah,
because for too long they printed too much money.
yeah,
So now that has resulted in a situation that they determine the volatility in the financial system. They
yeah,
can reduce the volatility in the financial system, or they make the markets go up by changing and saying we will do quantitative easing or
yeah.
something like that. So that's why I think today the central bankers have become much, much more powerful in determining equity market trends and various other trends at this point of time. Currently, they are worried about inflation, which is why the markets are headed downwards.
Downwards, yeah.
The day they cease to worry about inflation, we could have a much more positive markets. When will that happen? I don't know at this point of time.
Okay.
But at some point of time, they'll cease to worry about inflation. At that point of time, we will have a better market.
But you think they're doing the right thing? I mean, instead of printing notes, now they're saying, okay, we'll worry about inflation. So is it the right move?
It is the right thing, but everything in extremities. 2 years back, why did they print so much of money? As though printing money, if printing money had no side effect for the last 40 years, we should have been just printing money.
True.
I believe that somewhere the central bankers erred in thinking that printing money has no side effect.
Yeah.
And that was the problem they made, and today the world is facing the music for the excessive money printing done by the central bankers in the western world over printing money.
Yeah.
Unfortunately, the problem is even India has to face the music for the extra printing of money done by the western world.
Yeah. Fair. Yeah. So I think it's a good thing that we are now fighting inflation. Hopefully, once we have inflation under control, things should look a little more positive. But then, of course, everything has to fall in place for that, for sure.
Yeah,
Yeah.
absolutely.
Yeah. Okay. So just going back to talking a little bit more about mutual funds. So you spoke about the value theme. You did tell us a little bit about the value investing, the value discovery fund that you had, which was launched 18 years ago. Now, value investing was not very popular then. And what really prompted ICICI Prudential AMC to come out with a fund like this, to basically launch a scheme in this theme? So, what prompted you guys to do this?
Now it's too way back in the past for me to know. Actually, I just joined
Yeah.
1 month after the scheme was launched, so I do not know what exactly went on behind the launch of the scheme. But as I mentioned, my 90s experience was rooted from my failures in thinking on momentum investing, and thereby became a value investing adherent and a special situation investing adherent. But that is different from how this scheme came about. But globally, the experience has been that in the long run, value investing works.
Works. Yeah. Right. Absolutely. So now, what are some of the NFOs that you have planned in the future, and which themes are they going to be focusing on? So, what is it that we should look forward to?
See, we looked at this year, for example, we said, what are the basic things we do? You buy a house. So we launched an housing NFO.
Yeah.
Then what do? You travel around. So you need to have, so we are now launched a transportation and logistics NFO, because finally at the end of the day, without transportation and logistics, we need to travel around, and you need import and export.
Yeah.
And so we are launched a transportation and logistics.
Sure.
Then we looked for underperforming theme, and we found PSUs had underperformed for a long period of time. So we launched a PSU theme.
Yeah.
These are the themes that we had launched this year. transportation and logistics is the last one which we launched. And we feel that, this is a structural long-term theme, because in the long run, the number of cars in India, the number of two-wheelers in India, they all have to go up. And the interesting thing is, in this area, there's a lot of technology disruption as well, because over a period of time, people should move on to electric vehicles and all that. So I think it's going to be a very interesting long-term theme. And
Yeah.
given that export will also keep growing in a with China plus one, Europe plus one kind of thing. So you have a combination of two interesting themes
Yeah.
within the same theme fund. So that's a fund which we have launched this month for investing.
Now, just the last question before we end the session, and the question is very simple. I think throughout in the last 45 minutes, we've not spoken about some of the conventional equity funds, like large cap funds, mid cap funds, multi cap, flexi cap funds. So, can you throw a little light on those categories of funds? So, can you tell us a little bit about those categories? Who should have these categories in their portfolio? Why should we invest or should we not invest? What are your views on these categories of mutual funds?
See, we've always believed that, flexi cap gives you the opportunity to invest in all the capitalization. So it becomes a very interesting category to look at. And currently, we are a believer that large cap is cheaper than mid cap. And therefore, we like large cap over mid cap. And looks like small cap is slightly cheaper than mid cap, but then large cap is cheaper than both mid cap and small cap.
Okay.
That's the kind of view we have at this point of time. And but as such, as we are much bigger believers in asset allocation at this point of time, given the way volatility is there in the global markets. So as long as we still believe in volatility, we are big believers in hybrid funds, and we are big believers in asset allocation as a category at this point of time. Given that we are believers in market volatility, we are believers in debt mutual funds, and we are believers in SIPs. That is the near-term view.
Yeah.
Maybe once the market settles, we would have a slightly different view. And that's how we've been looking at it.
Sure. Great. Thank you so much, Mr. Naren. It was wonderful, wonderful talking to you. So many great insights about mutual funds, about economy. So thank you so much for your time, and we truly appreciate all the good insights you've given us. So thank you so much.
Thank you for the opportunity to interact with your customers and you. Thank you.
Thank you. Wow, what an engaging conversation with Mr. Naren. I mean, I had a great time, talking to him, and I hope all of you enjoyed this show and are completely looking forward to the next episode of Mutual Fund Ki Baat. So let me quickly summarize some of the points that we discussed. Firstly, Mr. Naren said that for all those investors who are just getting into the equity market or who are just starting their investments, the best time to start their investments in equity is when the markets are doing badly. Of course, balanced advantage funds and ELSS funds are the funds that you should look at as your starting point for mutual funds. And balanced advantage funds are an excellent choice for those investors when the markets are quite volatile. Now, for those investors who want to start their investments in the sectoral fund space, there are multiple sectors that you should be looking at, but you could start with the worst performing sector. Manufacturing as a theme is good for those investors who are looking for the long term. And of course, banking and pharma remains evergreen themes and are, able to stand the test of time. Then Mr. Naren also explained to us about SIPs and how SIP is one of the best ways to invest in equity mutual funds because, it really removes the whole emotional aspect or the emotional angle from investing because the idea really is to continue our investments even when the markets are going down. We should be, investing during our earning years and not really stop or discontinue our SIPs when the markets crash. And that is exactly what we discussed. When it comes to picking the equity mutual funds, we also spoke about value investing, and that was a long conversation that we had where Mr. Naren told us about how value investing as a theme works well in the long run. And especially as Indians, we tend to focus more on growth, but globally, value investing as a theme has worked. So then our conversation really moved towards silver as an investment, and Mr. Naren said that silver is a volatile precious metal which has the potential to give us good returns in the long term. And he also mentioned that investors can expect good returns from silver ETFs once the US Federal Reserve is really done with the interest rate hikes. We then asked Mr. Naren for how long can we expect this volatility in the market, and he said that no fund manager can really predict for how long this volatility is going to continue. But he also said that Indian markets are currently overvalued, and there are other markets which are relatively cheaper at this point in time, and we can expect those markets to do well once the volatility reduces. And of course, in volatile markets, he also said that we could look at debt funds as a category in our portfolio. We then spoke about Credit Suisse being the next Lehman moment. And Mr. Naren said that it's highly unlikely because the financial sector is highly regulated post 2008. And he also said that currently the sector, the leverage is quite low, and at the same time the NPAs are at its lowest in many years. We then also spoke about OPEC Plus slashing the oil production by 2 million barrels per day, and he said it's nothing much to worry about because the maximum cut that we can expect is about 1 million barrels per day. The biggest concern really remains the Russia-Ukraine war, and we can expect the crude oil price to go down only once the war ends. Next we asked Mr. Naren about central banks being the new fund managers post 2008, and he said that generally the central banks print money and that decides the volatility in the market. But unfortunately, that has not worked in their favor because it has had multiple side effects, because of which central banks are now looking at targeting inflation, which is having an effect on the Indian stock market. We then spoke about NFOs and what NFOs should we be looking forward to, and he said that people will continue to buy houses. So then housing NFO as a theme will be the focus, along with logistics and transportation, because people are looking at traveling a lot after the pandemic. Also, PSU NFOs can take advantage of undervalued PSUs. So in the end, Naren explained to us how flexi-cap funds as a category remains an interesting category because it invests across market capitalizations and it can give us good returns in different market cycles. He also said that we could look at hybrid funds as a category with a focus on asset allocation with an SIP approach. So this was a brief summary of our conversation with Mr. Naren. I hope you enjoyed this particular episode. Do stay tuned. We're going to come out with another episode with another wonderful speaker. And of course, if you've not subscribed to the channel, please do subscribe to Mutual Funds at Groww and do like this particular video. So stay tuned and thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.